Good morning, everybody.
Morning, morning. How's everyone doing?
Uh, Doing great. Currently wondering why I took profits on Oklo at 54%.
Yeah.
All-time highs for Oklo right now, this minute.
And so, if anyone didn't already get filled on the jump trade, which I think they did yesterday before the little dump off, I think got a couple comments. People got a little over 200%. You are definitely filled now with a big fat win, which we'll take.
Happy hump day, Des. Yeah, holy moly. $60 on Oklo now.
Oh my goodness, absolutely ripping.
See, my thought, and I can't really complain about taking a 50 something percent profit on a stock in a couple of weeks. But I was thinking we were going to I thought we were going to break that gap lower and get back down to the 40s, which I was going to dip in again. Boy, oh boy. They got some news this morning. They were selected to provide clean nuclear power for the Air Force Base in Alaska.
Oh wow.
So things are rocking and rolling for Oklo.
Yeah, and I think we're still fairly early in the news cycle for a lot of this nuclear stuff. Where we're gonna, we'll have some shakeouts and some volatility, but I think there's also going to be a lot more of that kind of announcement. Hey, this is rolling out. Micro generators for this are rolling out. Deal with AI companies for this. So just a matter. And I don't know. I mean, I think my approach so far has been to move into some of the nuclear stuff on a percent basis and try to get a couple different tickers, basically for that reason. I don't think it's a sector where there's going to be one winner and lots of losers. I think there's going to be lots of winners,
Yeah.
but I think there probably will be a couple just absolutely outsized.
Yeah, I think so. Miriam's asking, is it a good time to trade to Oklo? Well, it's crushing through all-time highs today. It's at 61 now. That's up to you. Miriam, I've got some options on. I had a pretty big stock position that I sold just maybe last week. Can't remember the exact day.
Oh wow, it is ripping
Oh
right
my
now.
word. That is a giga candle.
16% on the day. I'm sorry, I'm distracted just watching that thing.
But we do have Chris joining us today.
Yep, excited for Chris to be on. Like I said, Chris and I might we might clash a little bit on debit versus credit spreads, which would be a fun discussion.
And Chris, it does look like you're off stage. I'm not sure if that's on purpose, but you may have to click the on stage button. Oh, there you go.
There he is.
Waiting for you guys to bring me in.
There you go.
Hello.
There's the man of the hour.
bring in the lefty.
Well, Chris, let's start by talking about CPI, obviously being slightly under, or in a good way, under expectations. What's your take on that? Where do you think the markets are going from there?
Well, I have an interesting level. So I mean, clearly the markets post U.S. China trade agreement gap that happened on the 12th of May. It's just a little bit more melt up, a little bit more melt up. It's slowly. I mean, we're 1.7% away from all time highs. So I
Mhm.
think that the path of least resistance is just to try to get there. CPI news came in the last couple months. All the forecasts we've had for CPI has been like pretty much as expected, in line. There haven't been any really big surprises, and honestly, I don't know if the market really cared that much anyway. Today, classic Trump style, he's like, "Done deal." It's like, is it though? Because it's supposed to be approved by President Xi. There's probably still going to be ongoing negotiations. Um, I think that what's going to be interesting levels. I'm looking at a big gamma level with the J.P. Morgan investment side. 5905 on the SPX would be like the big call side resistance, and we're trading at 60.44 right now. So what this potentially tells me is that this market may do what it can to just melt up towards those all-time highs around 64, 61.45, but maybe turning at the end of the month as we go into like the June expiration, the end of the month, the quarterly expiration, and maybe having a bit of a sell-off by the end of the month or going into July. So it'll be interesting how it plays out. But honestly, like today, I expect it to be maybe some more direction. It's like you got Trump talking pre-market, you
Yeah.
have a CPI that comes out pre-market, and prices just dead sideways. So that's actually perfect for what I want to talk about today. Nate, you said we might clash. Look, man, I like debit spreads too, but I think what's nice is you can establish a line in the sand with a credit spread, and also there's quite a few ways I trade them where there's opportunities for daily income. There's ways to establish, if price just stays above this level, I make money. Price just stays below this level, I make money. And you actually can kind of increase those levels as opposed to a debit spread where you have to pay that little bit extra, make sure the market's covering that. They're both great. I mean, honestly, spreads are by far awesome trades to take. I think traders need to embrace them as opposed to thinking it's too complicated. It's really not. We can do the simple math on it today and just show you just some really good examples.
Yeah, and obviously I'm using the term clash very lightly and jokingly because I do still trade them on occasion. There's a couple things I like, but I think what you're going to talk about is going to maybe brighten the edge a little bit for where the credit spread works that Graham and I don't cover as much. So that's, we always try to have people on who are going to take a little bit of a different approach to this, not just say the same exact things that we're going to say anyway. So it'll be good for that. So let's jump in. So today's agenda, I'm just going to do a 2-minute market outlook. I mean, Chris just gave you a couple things already. We'll do a free income machine trade today just because, I always want to give some free trades out there. We're going to talk about credit versus debit spreads, and then we'll talk about the $100 challenge. Can you make $100 a day every day the market is open? Chris says yes, and we'll talk about how. So here's where we are, as we just alluded to, at this crazy looking market, just a little over 1% off the all-time highs. Now, I just want to take a quick trip down here and talk about why Graham and I have been really pretty optimistic since this peak. And the reason is, just to overgeneralize it, over the last couple decades, the quicker the flush, the better the recovery. Now, I want to first throw a disclaimer out there. That's kind of a technical overgeneralization way to look at the market. Okay, that doesn't take into account other realities that are going on behind the scenes. Not every crash is created equal. All those things, you have to obviously be aware of. But what I'm talking about is strictly the way kind of the market sentiment reacts to these quick flushes. And so we've been really, really bullish since the flush. And Graham and I both have predicted, June all-time highs, and hopefully we'll get there. But now we're getting to the point of not what happens after the flush, but what happens after we kind of get closer to the highs from the recovery of the flush. And in my opinion, what you would typically see, although with more volatility perhaps, is a rush to kind of beat that high, or maybe a battle at that level, and then a higher high. So this kind of goes in line with my prediction that I think we will end up having a good 2025, and then potentially a bigger, kind of true bear market or recessionary move later, whether that's 2026 or 2027. I think we might see some volatility and some battles around this level, but I think that the market will typically try to beat the kind of the break point here of the flush. So here's the flush from August 2024, kind of what I'm talking about. Got it very close to that highs, took a beat, battled again at that high before the flush, and then eventually went on in 2024, obviously ended up being very positive. The one before that, not as quite as much of a flush, but this was February 2023. You see it got to these all-time highs, battled around here for months, then made its move higher in 2023. March 2020 was COVID, obviously, extremely unique situation, but eventually got up toward the highs and just ripped straight through them. And in 2020, obviously went on to continue ripping. Here's May 2019. You can see got up to these highs, battled a little bit, went higher. Here's December 2018, which was a deeper, longer flush, and then eventually just kind of creep through these highs. A little bit of a different move here, but 2018 and then 2019 kind of followed through and ended up making some higher highs. Here's February 2018. This one was interesting because it looked like we were going to make one of those moves, and we actually got a second flush. That was more of a unique situation. We haven't seen this kind of move as much, and then took a longer recovery into 2018, and 2018 ended up not being a great year. Here is the one that I think really the only one I could find of a 10% quick flush or deeper in the last decade, where we got up and we just got another full rejection of those previous highs. So this is what I'm hoping doesn't happen, but one of the last 10 looked like this. And the previous one in 2014 again, kind of battled around this level for a week or so, tested back through it, and eventually was positive. So the question here is, what kind of action do we get? I think the most likely, again, I'm overgeneralizing here, but I think the most likely scenario you get after big deep flushes and then the road to recovery is that you try to pay that off. Some of the institutional money does come back into the market once you establish those new highs. You make that move higher, and then you kind of see what happens after that. And I would think that the most likely scenario is that 2025 ends up actually being a positive year. And then we get, we figure out if we're going to pay the piper here in 2026 or maybe even 2027. Because one of the things that I think is important to remember about the market and has proven true in almost every kind of collapse, whether it's the tech bubble or 2008 or even 2022, is that the market can typically push irrationality or irrationality. I don't even know how to say that. It can be irrational for longer than people think it can be. And so that's often why I think some of this happens later in the game than the fundamentals or even sometimes the technicals would show you, is because the market can just tend to be irrational for longer than people realize. And a good case study is, if just to go back to the Michael Burry situation and look at when he got short in 2006. His numbers weren't wrong. He was right to be short in 2006. He had all the data. He was fundamentally correct. The math was inescapable. And yet the market went higher and higher and higher on him for, the next 18 months to 2 years, way beyond the point where he was fundamentally and practically correct. The market just pushed that off. And in a global economy, you add in this other layer of, even if we are in really bad shape, as long as we're in better shape than some other economies, we can kind of push that, kick that can down the road a little bit further. So I always just think that's important to keep in mind in these scenarios, that yes, the market might have some, really vulnerable points right now, but that's not necessarily going to time up with what the price action shows you. We could see that, kind of extend 6 months, a year, 18 months, that kind of thing. All right, let's talk about the income machine. Let's do a free income machine trade here. Reminder, guys, you got to use limit orders for these entries. When we're trading spreads, a lot of times we're going to have like a wide bid ask. You don't want to just jump into the market because you could end up getting at the top end of it and cutting out some of your profit potential. So we want to make sure that we are using those limit orders here.
Nate, before you do this, I have to shout you out real quick. Been tracking some of these income machine trades you've been posting. About 14 of them closed so far with 92% win rate from the old income machine, doing the heavy lift and the dirty work for us. So I'm excited for today's pick.
Yeah, no, it's been cool. And again, the key here is just kind of getting into a position where you have the most bang for your buck relative to where the stock is. If you want to think about it, in the most simplified way. So let's jump in here. Hopefully everyone can see my screen. These are three of the stocks that the income machine likes today. You've got CDW, T, and HBAN. I looked at CDW earlier. It's in pretty good shape. Little overextended maybe, but the ROI wasn't as good. So I like T today. And so if you click on T, you're going to get the reasons why the income machine likes it. It's got some trend capability. It's got some weekly momentum. It's stabilizing, which is an ATR metric that I like to look at. And from there, you're going to choose your income strategy to find the income potential that you want, trading T. Give this thing a second to load. It's going to analyze the option chain for us. And then it's going to spit out some opportunities based on if you want to be conservative, you want to be balanced, or you want to be fairly aggressive. T is a pretty darn stable instrument, so I like the aggressive play here. So I'll click that one. We'll see what we got. And you can see it's not going to give us a whole lot of protection here below price, but it's going to give us a pretty nice ROI, a little over 33%. And that's based, by the way, on kind of the higher end of the bid ask, as we'll see here in just a second. But it's going to give you the 27.50, 28.50, all the details baked right in here. It's going to give you a break-even point, the trade summary with the cost, the ROI, all that good stuff. You can even tell it how many contracts you want to trade. And if you want to trade, 25 contracts, it's going to give you your numbers here. It's going to be an 1875 investment, 625 income potential, all that good stuff. And then you get your matrix here that tells you your potential ROI scenarios of, if the stock finishes down 0.5%, what you're going to make here. If it's down 1%, you'll end up taking a partial loss. Here, if it's down 2% plus, you'll end up taking a full loss. Again, this is the aggressive one. If you went to the conservative one, these would all be green because the scenarios would play out differently. But again, with T, giving it 2 weeks just to do anything better than lose 0.5%, I like the play. And like I said, we'll actually probably get a little more than 33% because this is geared to give you the more conservative play. So this is what the scenarios are for T. So let's go ahead. Let me jump over to the actual options here. Let's see. You should now see that. There we go. So you should now see T. Here's where we're going. We've got about 17 days out, and we'll do this 2750, and then we'll go up here and we'll go to the 2850. So we're getting about I guess T moved up about 8 cents. Well, that always happens, but you can get in here for about 71, 72 cents. So you do the math on that. If you get in for 71 cents and you make, 29 cents on it, you're going to make about a 40% ROI. So like I said, a little bit juicier than what that the income machine will give you because it tries to be a little more conservative on that. But that is the trade there. So I'll go ahead and type it into the chat for you as well. It's a buy to open the June 2750 call. Sell to open the June 2850 call. And again,
hey, I already posted that there in the chat, by the way.
Oh, wow, you're quick. All right.
But I had the little higher fill so people can get a better fill now.
Yeah, you should be able to get it for 71, 72 cents. Like I said, it's going to fluctuate a little bit. T's not a stock that's going to have massive volume. So get a little bit wide. Let's see if I get in for 71 cents here. Give that a second. See if we can get a fill here. Might have to go up to 72. There we go. 72 cents is the official fill there for the income machine on T. And that one will be a little, like I said, a little bit higher. What's that? 36% maybe? 37%. I don't know my mental math. If you get filled at 72 is not perfect, but pretty decent trade. A lot of income trades you're gonna make 5 or 8% when they kind of talk about these defensive trades. Here we went with the more aggressive one, so we're getting a little bit closer to price, and really we just need T to do a whole lot of nothing to pay us 37, 38%, and give it about 2 weeks to do that.
And,
all right,
Nate,
go Graham.
Just curious. I saw in there's a couple of plays. So you did the aggressive one, but if people wanted a more risk-off approach, there were options for them as well, right?
There are. You can do. I didn't want to take too much time today to get into Chris's time here, but yeah, you could do the more conservative one, which is going to pay you maybe 10, 15%, really safe trade. Even if the stock goes down 4 or 5%, you're still going to make your win on that one. Or you could kind of take that balance, which is some 15, 20% trade. You give it a little more room, and so you pick the option that basically you like. Which we got a whole bunch of feedback from a lot of different people who like a lot of different options, which is why we. And by the way, guys, we already actually made some updates to the algorithm just literally based on your feedback. So, yep. Okay. Well, Chris, I'll hand it over to you. We can jump into this debit versus credit spread. And I mean, anything else, obviously, you want to cover. I know you were going to talk about some of the math. And by the way, I know that some of the people mentioned, and one of the reasons I like debit spreads is the risk of exercise. But guys, Chris is trading the the SPX XSP assets that you don't have that anyway. So he's eliminating that risk anyway. So you don't really have to put that in the con column for the way that he's trading.
Very true. Yeah. So how do I grab the screen here, fellas?
Should be the bottom, like kind of right center
Oh,
there.
yep,
Share your screen
okay.
button there.
I see it.
All
All
and
right.
if you want to draw on the screen and stuff, I think you only have to use the whole window. There you go.
Everybody can see me draw. Yeah, we're good.
Yep.
Right. Okay. Cool. Okay. So the age-old debate: do you buy calls? Do you buy puts? Or do you create a simple spread? Look, Nate, Graham, debit spreads galore. They're all great trades. I just want to say, so the assignment risk, a lot of what I'm trading here is going to be, intraday income or weekly income. Credit spreads are one of my favorite things. I'm going to go a little bit high level first, and then kind of get down to, something very specific strategy wise that we've been doing for. I'm trying to think now, 6 to almost 9 months now. We have over 900 trades logged with the strategy, making about 90% winners. So I want to start. Why do I like credit spreads? So give me a why. Yes, everyone can see me type it on the screen here. I'm just going to use a classic little notepad whiteboard type approach. So why do I love credit spreads? Okay, I'll give you one of my favorite trades. Has anyone heard of the wheel strategy? Type in where I guess if you heard about the wheel strategy. The wheel strategy is you sell a put and you're willing to own the shares, and then you add covered calls to repair your trade. Okay. I personally like to use credit spreads because it's way less risk to do that. So I'll give you an example. One of my examples running right now is MicroStrategy. MicroStrategy is basically Bitcoin on steroids, kind of like a 2x leverage, even though it used to be a tech company. Now it's just Bitcoin. And then there's all sorts of financial engineering going on with Michael Saylor, with Strike and some other things, and all these different tickers. But MicroStrategy, I started using this as an income generator this year. So I bought shares at $396. Okay. And all I did was I added a collar trade. Now this is getting fancy here, but all I did was I sell a call and I buy a put. So I have downside protection, but I also have income with some price appreciation to the upside. Just from adding some additional collars, adding some covered calls, my break even after about 3 months of trading is down to $240. I went from buying shares at $396 to now break even is $240. What's price at MicroStrategy right now? MicroStrategy right now is trading for $392. So I'm still preserving a lot of the gains, but I've lowered my cost basis down by $156. That's a lot of profit, right? And at any point, I can just let it go and say, like, I'm happy, but I'm going to keep using covered calls. So I say that because what I like to do instead of just selling a put, where a lot of people don't want to take any assignment, is a credit spread is essentially using a line in the sand. Okay. And a credit spread, this is what we're going to do. I'm going to focus on, there's two ways I focus on this. If you want to be bullish, a bullish credit spread is you're going to sell a put at a higher strike, and you're going to buy a put at a lower strike. Okay. So let's use an example. We mentioned already, we kind of cat's out of the bag. I'm trading indexes. So let's use the ticker is going to be SPX. Okay. You can also use XSP. These are both index related instruments. Okay. So right now the SPX is trading at 60.55. Right. So we'll go SPX live price is 60.55. So if I believe, and we just talked about this, like the highs around 61.44, 61.55, or 61.45. If we're going there in the next day or 2 or 3, look, if you're doing this every single day, and all this market has done for the last 2-3 weeks has just been melting up higher and higher and higher, you can start every day just below price, and you can do the following. Let's say that here's a good example. So today we opened up right around 60.50. If I went and sold like a 60.25, okay, we'll just use a live example today. So live price is 60.55. Today's open was around 60.49. So I sell a 60.25 put. I buy a 6,000 put. Okay, and let's say that I can pull in around, let's say 75 cents credit on that trade. Okay, so let's do the math on this. And this is the difference between like a debit spread. You're doing the math in addition to where you buy your call if you're doing like a bull call spread. But I'm doing a credit spread where I'm establishing the line in the sand and then subtracting. So I have 60.25 is my line in the sand. Okay, for me to pull in full credit, for me to keep that 75 cents, all I need price to do for that day or for that expiration is stay above 60.25. Well, price is already 30 points above it. If it keeps going higher and higher to 61.45, there's a pretty good probability we're just going to see that 75 cents trade for way less. Okay, so 60.25 my line in the sand, and my break even price is what? 6024.25. Technically, that'd be my break even, right? So as long as price stays above that, I'm still keeping that 75 cents. Okay. Now, there's no assignment risk. If I took this trade, this is an index. So even if price were to go lower, my risk is actually I meant to be 60/20 here. Sorry about that. So I'm 5 wide. So my risk is $5, which is the width of the spread, minus the 75 cents credit. So what's that risk equal? $4.25. Okay. But my probability of profit on this trade, because I'm starting slightly lower, my probability of profit is around like 80 to 85% from the get go, right? In a market that is inherently bullish, in a market that is drifting higher, in a market that is destination 61.44, 61.55 in the next probably week or two. So probably profit is, I'll say on average, probably around 80%, maybe 85%, honestly. And with a bullish tilt to current conditions. Okay. So all price has to do is stay above 60.25. All right. Um, it's doing that. And what happens for this day? So if this is a 0-day expiration, so expires today, this 75 cents credit will trade lower way faster. Way faster. Okay. In fact, how quickly do you think 75 cents can basically trade down to 25 cents, 20 cents, 15 cents, 10 cents? You'd be surprised. Like probably if I took this trade in the morning, let's say, 9:31, 9:35, and prices drifting higher, this 75 cents within probably 30 to 60 minutes is trading for like a 50, 60, 70% max profit of this credit. Does that make sense? So if I'm getting in for just let's just say one contract, okay, I'm going after 75 bucks, and I mean within probably an hour, I can have maybe 50 of that $75 in my pocket, and I can protect it and I can eliminate the risk and I can walk away. So this gets into what Nate said earlier. I mean, $100 a day is pretty achievable, because if I did two contracts and I'm trading this for basically $150 a credit, it's pretty easy to see price cooperate for me and grab $100 and walk away. Now, the nice thing is I'm doing this just on the put side. Okay. I'm doing this on the put side. What about if we did it both ways? What if we did this both ways? I'm gonna move this over just a little bit.
Yeah,
Uh,
maybe blow up your text size a little bit too there,
Let me see if I can.
so you can, because I know on this screen it's a little bit smaller.
All right. Let me see. Get out here. There we go. Can I make this bigger? There we go. Is that better?
Yeah, that looks better for me.
Okay. So let's say this. Here's a scenario. Can we do this both ways? Right? What I mean by this is, can we establish a line in the sand for the Bulls and Bears? And the answer to that is yes. Okay. It's called market makers or market making. What that means is every day you look at a broker platform, there's a plus minus move expected for the day. Right? There's a lot of things that run into this. You're going to see, the implied volatility of the underlying asset. If there's any major news, a lot of the stuff is kind of baked into the options market. And typically what this allows market makers to do, and they've been doing this for 50 plus years. So through bull markets and bear markets and directional moves and non-directional moves, they're establishing expected scenarios. And this comes back to standard deviations, this comes back to probabilities. So the expected move on the day, today, you want to know what the expected move was today? Let's go. Today's expected move is a plus minus about 26 points. Okay. So what we can do is we can look at the highs are only expected to move about, let's just say 30 points from the open. Okay. The lows are only expected to move about 30 points from the open, right? So if you look at a high low for the day, you're looking at somewhere maybe a 60-point range from top to bottom. And there's about an 85% probability, like kind of baked into this position. So what I can do is I can essentially establish a line in the sand in the top, establish a line in the sand in the bottom. And if the market makers get the job done, which they typically do every single day, we can make money. And so this $100 a day concept is I make money on the bearish side, so I'm looking for price to stay down, and I'm making money on the bullish side. I'm looking for price to stay up, and essentially establish a range for the day. And that range is surprisingly accurate, right? Even through the wild and crazy March and April fall, even through February when the market started to top over a little bit after we hit those all-time highs, the dropping, the increased volatility, when everything went, when all of a sudden our VIX is going from, 13, 15 up to 25, up to 40, up to 60, we didn't have a losing trade, this style of trading. And so what
Well,
happened was, go ahead.
I was going to say,
Question.
well, I think this is one of the point, and maybe some people in the chat have already asked this question. I saw a couple of people with similar. Uh, I think one of the things that you have to understand. So basically, what Chris is doing, he's putting the market maker move in a box, and he's
Yes.
saying, listen, if they're right and they're predicting an accurate extreme move in either side, if they're right, I'm right, because either way, whether it's the 30 points up or anything less, 30 points down or anything less, that's in the market maker box. I'm going to win in all those scenarios. But the really cool thing about it is he's not picking a box from, February's average ATR and hoping it
Right.
holds up. The
Live.
market makers are moving that based on real volatility and their predictions because they have to protect themselves. I mean, think about it. They have massive risk if they're wrong on that move.
Right.
And
Market makers mandate is to be delta neutral. Market makers
right.
requirement is to be neutral, right? So if prices are moving, they're hedging. If prices are not moving, they're making a killing because they just keep their levels, they keep their box. And that's honestly, that happens like almost every day. In fact, you can go back and I'll show you just a really cool image here. Let's just go back to the charts and I'll just show you this like live examples. Here is the workspace that I use every single day. And, I can just go back here and say the days that we've won for my $100 challenge. Today, yesterday, the day before, last week. Okay, just take a look at all these. In fact, I'll just go back to a lot of these levels, Nate. You wouldn't be surprised that a lot of these are winners, and here's why. Market makers do their job every single day. There's a winner. 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 There's a winner early in the morning. This one was down and up. There's a winner right there. Winner right there. Winner right there. Winner right there. The Tuesday coming out of Memorial Day, that was the only loss I've taken in the last couple of weeks. We actually added up yesterday. 30. We've had 32 out of 33 trades winners the last couple of weeks. And
Okay,
we've
so
had those streaks. Go ahead.
Let's run the math on that because I know that's one of the big questions I get. So
Yeah.
because Chris, you know what I think? Not to go on a rant here, but I think one of the biggest disservices people do, these kind of so-called gurus, whatever you want to call them, they get online and they say things that sound good and sound right, and people nod their head. And one of the big ones they say is, "Oh, you should never trade with a negative risk to reward," because it sounds good. You should never risk more than you're going to make on a trade, and
Right.
and that sounds good of the year, and people kind of nod along. Yeah, no, that makes sense. Why would you ever? And they cut out so many potentially great strategies. And frankly, if you run the data on this, guys, here's a crazy thing. If you have the time, Go to a great stock like Apple or Nvidia, Google, Microsoft, and just do this. Pick any arbitrary entry, a break of the previous high, a weekly bullish close, a bounce off the moving average. Pick any single one you want, and then do these steps. Trade it as a strategy. Track it as a strategy where you go for like a $5 move on the upside and a $2 move on the downside. Then flip it, where you go for a $2 move on the upside and a $5 protectionary stop on the downside. What you will find over and over and over again is the negative risk to reward, even on a great stock that you would expect to be the perfect stock to go for those big moves. The negative risk to reward is the better strategy the vast majority of the time. And I've done this, guys, on thousands of data. It's shocking to find out that even in a stock like Apple or Nvidia, which you would think would be the cream of the crop to go for big wins and smaller losses, is more profitable to trade the other way around. And so I said I wasn't going to go on a tangent. Here I am. So this is, I think, a thing that is so bad for people to get in their mind and think. I'm not saying every strategy should be negative risk reward, but many of the best are that way for a very good reason. And the reason is because if you give the market room to be wrong and an easy way to be right, you're going to stack up a lot more wins than getting the exact timing right of trying to get big wins and giving the market very little room for you to be wrong. And so all of that to say, can you run the math, Chris? So if your average loss is what, your average win is what, and if you can maintain a 90+% win rate, kind of what you're looking at as far as the profit factor that stacks up over time.
Yep. So let's do this. We'll have, let's see, 90 winners. We're pulling in around, well, we'll do this. Our winners are roughly, $100 a day. Okay. And let's say that we have 10 losers at, we cut it off at, let's see, I'm trying to think of partial. So it'd be about 150. We'll put a $200 loss, but at $200. Okay. So if we have 90 winners, that's $9,000, right? So you got $9,000 in winners, and you have 10 losers. That's $2,000 in losers. What's your net?
Yeah, $7,000 over 100 trades.
Right. So over 100 trades, it's like, even with a negative reward to risk, the math makes a lot of sense. That screenshot that I just posted here, this is the P&L curve. This is live, like 1 minute data for the last 3 years of this strategy. What does it do? It does this. So it's not perfect. Obviously, there's a loss here and there. There's a loss here and there. But this is one of my favorite things, is when traders object to me with this strategy. Like, I don't like this negative reward to risk. I get it, but this is something that you win the day, and if you don't win the day, you trade tomorrow. And if you don't, it's like, we've only had, Nate, in 3 years, we've had 2 losses in a row. That's the worst it's gotten, and that's ridiculous to think about how nice it feels to step in almost every single day and win, and expect to win every single day. And that's what 3 years looks like. Like, that's pretty darn good at a one contract trade, pulling in over 23 grand on a one contract trade. And that's taking losses. That's taking losses. That's, almost 300 trades. That's a lot of trading. Now, I just mentioned the service. We have 900 trades. Well, why is that? Because I'm fairly aggressive. I like the strategy every single day. I'm pretty aggressive, where I sprinkle in 2-3 trades at a time. And I show how this is all done. But I mean, I've got a trader this week, Nate, that in this service he's already 20 for 20 this week. He had 12 on Monday. He had 8 today, or I'm sorry, 8 yesterday, and he's already 5 for 5 today. So I guess he technically is 25 for 25 in 3 days. It's completely changed his way of trading, where literally, and this is not exaggeration, probably 3 months ago, he was new to the service, new to me as a member, and could really, was struggling to pull up a broker platform, finding the trades, to now look at him. He's like, he's a master of this $100 challenge, and he's killing it. I mean, on average, I'm seeing pulling in like $400 a day, $500 a day routinely. He's growing his account, and so now he's just trading the contracts he's comfortable with. He's comfortable with the risk, but that's what it does. So the negative reward to risk, I just want you to kind of get that out there. Like, it's okay, because you can trade through it. The nice thing is whether we win or lose the day, number one, I expect to win. Number two, if I don't, I know that I can trade the next day. And even an example would be this. If I got so discouraged, on this Tuesday after Memorial Day right here, because I did take a loss that day. I took a loss because markets were pretty directional. But if I go back in time, okay, or even afterwards, if I got discouraged, what happened after that Tuesday? Winner, 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 right? So one loser that is all of a sudden followed up by 1, 2, 3, 4, 5, 6, 7, 8, 9 winners. It's like we trade through it. Don't get discouraged. In 3 years, we've only had two losers in a row
Well,
from the
and
day to day basis. It's very
part of
it's
that is a little bit of a kind of a hack, if you will, to the strategy. What I mean by that is if you get blown out on a rare loser, what that means is volatility went crazy.
yeah.
And so the very next day, that same trade that blew you out is actually going to be your advantage when you set up the trade the next day.
Very true. And and it doesn't mean that. And I've done the math on it. I mean, I looked at all the trades and I doubled down, Nate. Like if we took a loss, I doubled down the next trade,
Mhm.
and it only had like again, I had experience where I doubled down and I had that two losses in a row, so I doubled down and ended up taking a second loss. But net, I still made an extra like $1,500 over the test
Mhm.
by doubling. So I mean, is it worth that risk to make an extra $1,000? I mean, it's still $1,000, but you're still but it's only doubling down once. It's not like you're there. There's literally a strategy out there that's like this style from $100 challenge with a martingale approach, which is insane. Like I'll never do that. That's
Yeah.
crazy amounts of risk. And it's popping up on like I see this like Captain Condor is what they call this guy, and he pops up on some like spot gamma liquidity levels, and some of these are pretty crazy. That I also wonder too. It's like market maker's job is to stay market neutral. You almost wonder, it's like if some of these trades get too big, it wouldn't it be easy just to run them, like run these levels, but they don't because it's still market makers mandate to stay neutral. Their job is to stay neutral all day. So it's way harder for them to have to hedge for the day and buy all their calls to offset their box that they're essentially establishing from the very beginning of the market. The nice thing is too is if everyone's worried about assignment risk, if anyone's worried about, what about pattern day trading, if I'm doing this every single day, there's workarounds. We'll get into these details in a little bit here, but you can trade futures. You can also just have different accounts where you trade two on one account, three on another account, never run into pattern day trading restrictions. If you have a margin account, if you have an IRA account, I manage a bunch of IRA accounts. I can trade whatever I want. I've got plenty of cash to take these trades. It's, cash settled. Like I take the trade Tuesday, settle, or I'm sorry, take the trade Monday, settles by Tuesday, take the trade by Wednesday. There's plenty of cash to take those trades. So I'm trying to make it very clear, like we don't have a lot of excuses. If you're looking for something to trade, every single day, looking for daily income, this is a nice way to do it. And the confidence of coming into the market expecting to win feels pretty good. And if we don't win, that's like I don't get discouraged because I know the next day is probably fine. The next, 3, 4, 5, 6 days in a row, 10 days in a row. We've had some hot streaks with this, Nate. This $100 challenge, we've rattled off like 36 for 37. We're 33 for 34 right now in this last little stretch. We've had like 46 for 47. Like we've had some really big streaks where we had like one loser for a big chunk of winners.
Yeah.
And it's just nice to know that we're trading with a high degree of confidence. We're letting the market makers do their thing. We're aligning ourselves with basically what's been happening for 50 plus years in the market, even through the crazy volatility we've seen in 2025, even through February and March and April. Very few losses because volatility expands. And what that does is it gives the market makers a bigger box to trade, and
Right.
we can still take advantage of that bigger
Right.
box. So, like you said earlier, I'm not trading February volatility. I'm trading like today. I'm trading
Right.
market makers are dynamically changing the box every single day, and that's a good thing. So,
Including knowing when Trump's going to speak and everything else, and all kind of baked in
exactly,
there. So,
exactly.
now I know we got some questions, guys. We are going to cover the entire $100 challenge here in just like 4 minutes. So hang
Okay.
tight. I know you guys have a lot of questions. How does it work? How often does it trade? How does Chris manage it? All that stuff we'll cover here
Yep.
in a minute. One other question I had before that. Um, you talked, and what I think is one of the more fascinating parts about the $100 challenge is that you're actually not waiting all day to defend those levels. You're often getting
Right.
out quickly. That's a very
Oh
big
yeah.
difference. I know a lot of people have already asked, okay, so it expires here or there. No, no, no. To double down on that win rate, what Chris is doing is letting himself be right just long enough to cash out a chunk. So can you talk about like kind of how quickly that, because that was, to me, I mean, I love trading with lines in the sand. I love using a lot of the same kind of core methods that you use, but I was absolutely shocked at how quickly some of the trades went. I mean, legitimately, even after you explain the entire strategy, I was very surprised that sometimes in 15 or 20 minutes, the value of that had gone up so quickly. So can you kind of walk through how and why that's happening?
Yeah, well, Nate, if you remember back in July last year, you took this trade with me, and in 15 to 20 minutes, you're out of the trade.
Yeah. Eh,
So it can be very quick. Like literally, sometimes, like I start the session usually around like 9:15 a.m. Eastern time, just a few minutes before the open, and we just kind of get a pulse for the day. Market opens. We're usually in the trade within a couple of minutes, and I end the session every day around 10:15 a.m. and we're usually out of the trade with profit by the time I close the session down. So within about a 30 to 45-minute window, most of the time we were out of this trade together, where we take it together, exit together. And if we don't, I post it in my Telegram channel for the group, and it's 10:17, it's 10:25. It's rarely do we have to hold these trades until like noon. So and it can be a set it forget it. You're comfortable with the risk, you're comfortable with the way the setup is. Brokers do the heavy lifting by just setting the take profit. And so, like I said here, how long do we hold a trade? Maybe 30 to 90 minutes, and most of the time less. I would say within about 45 minutes, we're usually out of this trade together, and that feels pretty good. Again, I'm not trying to trade this thing all day. I'm trying to let the market makers do their best in the morning to keep things relatively contained in the box, and then the flows can hit however they want. I don't care what happens. Like today, if we melt up to 6,100, I don't care. I don't care if it drops to 6,000. It's like I just want to
yep.
get in and out with what the market is likely going to be doing all day, which is stay contained, get some flows, and usually after 1, 2 o'clock, when it's just kind of all directional, it's all U.S. based. Then there's where the flows are going to take us maybe for the rest of the day. Look, I'll explain it this way. I've seen the market. Here's how we can make money with the strategy. Okay, let's say that here's opening bell. Just there's a reason that this works really well. Is time decay is aggressive in a same day environment. So if we start here at opening bell, so I'll put like OB for opening bell, if I can draw that, and then CB for closing bell. Okay. Once we get to about the 1/3 point, and in fact, a lot of times it's even before that, 1/3 to like half of this time decay to 2/3, our trade is usually out with profit here most of the time, because we're just going after a respectable like 15, 20, 25% take profit. We're out early in the game. So, that 1/3 of the day, 2/3 of the day, or halfway point of the day, I don't like to hold it that long, but here's how we can make money. If price opens, and just use your kind of imagination with me. Let's say price opens right here. Okay. Price can do what it did today, which is starting out very slow and choppy. Okay. That's a winner. Okay, opening bell here. Price can start directionally moving a little bit more aggressive to the downside and then come back and recenter. We can make money. Price can open up here, go a little bit directional, come back and recenter. We can make money. Okay, price can go really aggressive and hold down here, make its way back towards center. We can make money. And what we rarely see is we rarely see price do this, start lower and ending lower. We rarely see price starting here, going higher and ending higher. We rarely see that through the course of a day.
I mean,
If
you
that
just
does
showed the
happen,
charts. It's
one
those.
one of
It,
10, one of 11, one of 12,
yeah.
it's like it doesn't happen very often. So the norm is this is what we can make money on up, down, sideways, and that's usually what the market's going to give us. This market's not, beelining for a low or beelining for a high. It's not just ripping, I mean, plus or minus 25 points in the day. The market doesn't rip 100 points out of the open, Nate. Like it usually isn't the case. So a lot of ways that price can just kind of fluctuate, oscillate, do its thing. And even this environment of open here and just a really slow, methodical, like this is what June has felt like so far. Just a
Exactly.
slow, we still make money, even though
I was
it
going to say
was
that's the other
directional.
thing. Even a directional day that just grinds slowly,
Yep,
you're still,
we're still making money
it's still. All right. Well,
because of this, because of time. Yeah.
let's jump in, folks. It's about what 10:50, so we don't want to keep you here for 2.5 hours. We'll jump into actually what this is all about, how Chris is doing it. I'll close the chat, guys, just so that we can actually focus on the presentation. Still has that private chat if you need anything, but I'll enable that just in case you have questions there. But we'll do it this way so that we can actually focus on the presentation here for a minute. Let me just move the speaker over there. There we go. And I think there should be a way to kind of narrow down your chat a little bit, folks. Hopefully you get a big enough screen here. And we've alluded to this a whole bunch of times, the $100 challenge, how to target $100 a day. Every day the market is open. And Chris says, yeah, there's a way to do that, but not the way most traders think. And what I mean by that is almost everyone you talk to, if you said, hey, how would you make $100 in the market today? They would start by telling you, pick a good stock, find some directional move, find this thing, have a watch list. None of those are bad, but what Chris just talked about is exactly what I think is the most foundational principle for any trader, is finding lots of different ways to win, finding lots of different ways for the market to do many different things, and it still result in money in your pocket at the end of the day. Nothing's perfect, but find that kind of strategy. And so that's really what we kind of want to shift gears into today's, okay, you now know some of the mechanics behind that, but let's talk about kind of the system, the data behind it, the structure behind it, how Chris actually approaches this. And you already saw a bunch of feedback in the chat from, what his students have actually done, which is probably the most important thing.
Right.
And so we'll dive into that. If you have questions, feel free to use that private chat, but we'll ignore the chat here for 45 minutes just to get right through the presentation, walk you through all of those details, and then we'll kind of open the chat back up at the end if you guys have follow-up questions.